Welcome to Pioneer FX. Today is the 7th of November, just past 10 a.m. here in the UK. Now, there has been a lot of speeches last week. We had the President Lagarde's speech last week on Wednesday. We had the Fed FOMC meeting on Wednesday as well. And we had the BOE interest rate decision. And yeah, just wanted to sort of recap and touch down on exactly what had happened and what had occurred last week. So last week, President Lagarde was mainly focusing on the outlook for inflation over medium term remains subdued. So comments coming out from the meeting, it was forward guidance on rates outlined three conditions that needs to be satisfied. Despite inflation surge, said three conditions are unlikely to be satisfied next year. Even after the PEP ends, important for monetary policy to support recovery. That includes appropriate calibration of APP purchases, undue tightening of financing condition is not desirable when purchasing power is being squeezed by higher energy and fuel bills. That's a big concern there. The part on rates is the key passage as Lagarde pushes back against market bets on ECB rate hikes, which we have already seen pulling back since the start of the week. Currently, the market is seeing a 10 basis points rate hike for the ECB in December 2022, compared with 2 rate hikes priced in for October 2022 at the end of last week. But in any case, this talk is largely a conjecture, and as the ECB is not really in a position to hike rates. So this was just a hype previously to say that they're going to raise interest rate hikes, but they aren't. The next big policy move will be increasing APP purchases once PEP ends in March next year. So still sort of a bearish scenario from the ECB there. Let me just share my screen. And last week we touched up on the dollar with regards to the Fed's conference meeting on Wednesday the 3rd. Largely bearish from what we could see here. So still that bearish tone is kicking in. With regards to the RBA Australia now statement last Friday we had the statement, the RBA statement. The board is committed to maintaining a highly supportive monetary conditions, and the notes from the statement is for inflation to be between 2 and 3% on a sustainable basis. So that's their target, and the labor will need to be tighter and wages growth materially higher than they are at present. The speed of this recovery is consistent with the strong underlying momentum in the economy prior to the outbreak. So there was this COVID outbreak. There was the second one that was spreading in Australia. So the speed of the recovery is relatively strong. So that's a positive from that end. The GDP is expected to grow by around 3% over 2021. Growth is expected to be around 5.5% over 2022 before returning to 2.5% over in 2023. So that itself is like a parabolic curve. So you can see here growth is expected to be 5.5% over 2022. So that is a massive sort of bullish comment from the statement. The outlook is for underlying inflation to pick up gradually over the next couple of years. So they are expecting to see inflation to pick up over the next few years, even though the inflation target is between 2 and 3%. And at the moment, it's currently at 3%, the inflation at this moment in time. So it is sort of sustainable. And the trimmed mean inflation is forecast to be 2.5% at the end of 2022. So that's that coming from Australia, positive on that end. So we're still maintaining our AUD longs. With regards to the pound, we had the pound meeting last week as well. The Bank of England's Monetary Policy Committee sets the monetary policy to meet the 2% inflation target. And at the moment, the inflation is well above 2%. It's currently at 3.1. So that is currently overheating and causing major issues with regards to the pound, and in a way that helps to sustain growth and employment at its meeting ending on the 2nd of November. So that's that one. You can briefly have a read of the monetary policy summary. I'm going to send that to you guys through here. I think I already done that. That was through the public group. I need to send that. I need to forward that on to the private one, which I will do. There you go. There you have it. We can click on that and we can have a look together. So the bank rates maintained at 0.1% over November. So you can have a brief read of this. I'm not going to go through this entire report, but yeah, what is concerning for me right now is the inflation rate at this moment in time for the pound. Just looking at the data here for the pound, the consumer confidence is relatively extremely low. The wages growth is pretty up there, but it has ticked down. The unemployment rate is down. The inflation rate is well above the 2% target. Comp PMIs and the manufacturing is all high. So if the PMIs are all high and the consumer confidence is down, that is an alarming thing. That is something to sort of alarm the pound. And also, let's just have a look at the CFTC report as well. We'll have a look at it through Trading Stir. It's all over the place. I mean, the last time we checked for the pound, it was like very consolidated. So we need a better or a clearer image as to where they're looking to take this. You can see here, it's all over the place. It's up, it's down, it's up, it's down, it's up. They don't really know where they're going. And at the moment, it's looking like it's going to push higher. But I'm not really going for that at this moment in time, because looking at their statement and where they're looking to take the pound right now, is the problem is their consumer confidence and also their inflation. So two major factors that's currently pinning down on the pound. And also looking at euro is not looking great at all. If we have a look at what's currently happening in euro, I mean, the comments from Lagarde is extremely bearish. They were expecting to see a rate hike, but at this moment in time, they're not looking to rate that. At the moment in time, they're not looking to hike the rates and potentially keep them the same. But what is really frustrating for euro is the inflation. It's well above 2%. It's currently at 4.12. That is double the amount. Looking at the euro there, we'll have a look at it on Trading Economics as well, just to see how much, I mean, how high it's been ticking up for the euro this year. I mean, how much further higher it has been ticking up for the euro this year. So euro, we'll have a look at the inflation rate on a chart, and you can see the target was 2%. It's double that. You know, it's just been on a parabolic. You can see this curve here. This chart is like, it's doing that. That is a concern right there. This shift up from July up until now. So on that note itself, euro, we're looking for shorts, still continuing to look for shorts, and also. We'll go back to this report and just to confirm, just to see where they are in terms of euro, just to see the retail traders, what they're currently doing. retail traders are above zero, so they're overall long, hence the reason why the price has been pushing down. And also the large speculators as well as the hedges, they're currently at a zero mark. So hence the reason why I have sort of backed away from the euro, just trying to see a bit more, further direction here as to where they're looking to take this. But coming from Lagarde and the euro, the ECB itself, they're most definitely bearish. And looking at this, they've been increasing their decreasing contracts. The hedges have been pushing up, so they've been buying right throughout. So potentially we could expect to see large speculators push down even further, so long as the retail traders are above the zero mark. So still expecting to see euro shorts, but the future doesn't look too great. We really need some more evidence as to where they're looking to take this. But from that tone itself, we're still currently bearish on the euro. And let's just touch up on fundamental. I mean, the fundamental shift has changed this week actually. Since we last met on Wednesday, euro has gone even further bearish now, lower than Canada, as you guys can see it here, due to their inflation rate at 4%, 4.1%. So let's just filter that now. Oops, what happened there? Let's just highlight this. Something wrong there. Oh, there we go. So you can see euro now extremely bearish, and yeah, potentially looking for some more shorts for euro coming out of that meeting last week. Australia still extremely bullish there, and coming from the meeting last week, they've further, I mean, the tone from that meeting was extremely bullish. So we could potentially look at a euro AUD moving through to this week. Euro AUD could potentially be the one. We'll look into it now in terms of the actual chart and entries. Australia still maintaining that bullish momentum. The pound, I think it's going to go from extremely, it's going to go from extremely bullish back down to bearish towards where euro is potentially, but looking for some more further guidance there. The yen is most likely going to tick up towards the bullish territory due to potentially we're looking for volatility to push up even higher. Let's just cross-check that in terms of where we are currently. Cut base is a good one to have a look at. The VIX in terms of forward guidance. So VIX, you can see here large speculators are overall bearish, and it looks like, look at this guys, retail traders have pushed up as well. So what we could expect this through to this week now is potentially a push down to wipe out the buyers here. There's a lot of buyers coming in, so expected to see a push back down. That's a massive increase coming from the retail traders. So expecting a push back down to ideally towards 15 before pushing higher in the long term. Far too many buyers have crept up there, and it looks like the table is starting to turn. You know, the maximum contracts potentially have been hit. And also we'll have a look at it from maximum. Yeah, so that is currently the maximum. It could potentially go even higher. So if that goes higher, that means, yeah, we could expect to see 15 as our next target before pushing higher. Let's see what we're like in terms of any major news potentially through to next week, or any sort of data releases we're expecting to see next week. So we're here on the 8th. We've got unemployment rate for the Swiss franc, something to watch out for. Fed Chair Powell's speech in the afternoon. and then pushing through Tuesday. Got the PPI inflation data for the dollar on Tuesday, as well as the Fed Chair Powell's speech again on Tuesday. So it looks like there's going to be some volatility there for the pound. We've got consumer confidence for Australia, expecting a tick higher for that one. So yeah, do keep an eye out of that through Wednesday. So there's a lot happening from the start of the week. We've got inflation rate for China, all high risk news, and then in the usual initial jobless claims, core inflation rate, and the inflation rate for the dollar. Thursday now, unemployment rate for Australia. The ECB macroeconomic projection for Euro. This is going to be a key one for the Euro area, actually. So do keep an eye out of that one, 10 a.m. There's a lot happening through to this week. But looking at where they're looking to take the VIX, actually, so it could potentially start to push down before pushing higher. But looking at the economic data release, it looks like from the start of this week, we're going to have a major increase of volatility. And then potentially towards the end of this week, we could start to see volatility push down. Just looking at, you know, the market data released there versus the VIX futures. Right, now we're ready to jump onto the chart, since we have a clear sort of bias as to what we're currently looking for. And obviously looking at the chart work here now, we'll have a look at this now. So looking at the oil here, to start off with, we'll have a look at oil. We were bearish for quite some time. Let's have a look at oil. Where is it? Go to Trading Star just to see what sort of numbers we got this week for oil. Where's energies? Here we are, light crude oil. That's the one we're after. Yeah, so non-commercial against commercial, and you can see the retail traders on the red here. So the commercial hedges, they're still sort of overall short. Large speculators, they've been pushing higher, but it looks like now there's a major shift coming in for oil here. You can see this sort of curve, whereas they're looking to take this one to go down. Far too many traders, retail traders, they're above zero. You can see that line. They're buying through this. They're biting through this area here. So expecting to see hedgers to give up their contracts, and then we can see a major push down for oil. So that scenario is still playing at the moment. You can still see that clearly. The momentum is currently extremely low. We saw a lovely push down. For those who have caught it from the highs, you're over 300 pips in profit. Now let's just have a look at what we can expect through to this week. Let me just delete this and get rid of these lines just so that we're clear. Get rid of this third touch of this box over here. You can see the third touch played out perfectly. Yeah? 0.1, 0.2, there was the third touch. It pushed down, pushed back up, and pushed down again. It's currently broken out of this third touch. So that was a good one. We'll actually leave that trend line still there. We can put this trend line now. We could put another trend line here, from here to here, potentially. So we'll keep an eye out of that. That's 0.1, 0.2. Can we have the third touch this week and potentially a meltdown? So we hit two of our targets last week. These two targets in green. So if we did take partials, well done. So what to expect through to this week? Let's get rid of some lines and just clarify what we can currently see. we can potentially put another support here somewhere. Okay, so that's looking good now. So the bearish momentum has started to kick in. It formed the lower low. We could potentially retrace. We could potentially see a retracement higher. So what to expect through to this week? Get rid of this box. It's no longer valid since this trend line has been broken, but we'll keep that line in there. So what to expect through to this week now? We could potentially expect to see a push higher above this area, above this zone here. And then we could expect to see a meltdown or potentially even push down as low as here to retrace from before pushing lower towards 77, which is realistic. Or let me just place my Fibonacci on as well. So you can see my fib actually hit the 88.6 perfectly without even drawing on the fib. It just goes to show that sometimes you don't really need the fib to see, or to project to see what could happen in the future. So that's that one. Or we could see a meltdown from the get-go, potentially down here to attract buyers more further into the market, and then we can go towards 73. So that's the second scenario. And then we could have a major shift higher towards these highs, wipe everyone out before pushing down and melting through to this area here, retracement here, and then we could see these targets to be met. So 3 scenarios most likely to be played out through to this week. As you can see, the MACD is currently pointing lower. So yeah, we could potentially see a retracement higher before pushing lower, or the momentum could continue on if we place our Fibonacci here and just monitor these retracement levels. As you can see right now, it has retraced from the 78.6 fib, 78.6. So that's a good area. If you guys caught that, we could potentially see 88.6 to be the next target before pushing lower. So that's that one for US oil. In terms of psychological stops, again, you want to be placing it slightly above this area here. So psychological stop just there is ideal, but still looking for that 69 as my long-term target to be targeted over here, 60, 69, 67 for US oil. USDJPY, we're still short on that one. Yeah, last week we did manage to get that push down, and now it's most likely going to retrace. So this one still stays the same. You can see it's in a consolidated area here. So a fair few scenarios could most likely play out. We could potentially get a retracement higher before melting down, or we could have that third scenario here, a push right down towards these lows before pushing higher and then dropping down towards 111. So 3 scenarios most likely to be played out. This one still stands as it is. We could draw another golden box here for entries. That's our entry at the top as well, to get that perfect entry, you know. But I'm still currently short from these highs anyway, so sometimes it retraces, sometimes it doesn't. But yeah, this one still stands as it is. And also do note, guys, we've got this trend line here at the bottom, 0.1, 0.2, and here's that third touch. So that third touch is still consolidated. It's in that consolidated area. There's that third touch here. So you can actually draw this on. You can see it's actually broken out of our third touch. Okay, it's broken out. It could potentially go back into this zone, and then we can start to look for sells for a target of 111.6 1.156 or 112 as our target, this area here for UJ. And also a lot of buyers are coming into the market because we had that impulsive wave higher. Price has retraced. So they're expected to see another wave higher potentially. And if it does push high, we've got our pending sitting at 114.837 before the major meltdown. So that one still stands. Let's have a look at Palladium. Palladium was an absolute beautiful trade for us. Large speculators are overall short. It looks like they have maxed out. We could potentially see a retracement further before pushing higher for Palladium, but we'll look through it now. So what to expect for Palladium at this moment in time? Last week, I did mention to you guys there could be 2 or 3 scenarios most likely to be played out, and it currently is following this blue line. Price pushed up, retraced, attracting sellers in the market at the moment. So let me get rid of these lines and this line. What to expect for this one moving through to this week is, where is it? We can get that push higher potentially, retracement down, and then wave higher. Or we could expect to see a push down through to these lows. But if it does come down to these lows, it's going to be pretty aggressive. It's going to break through this 1949. Place a nice pending order there before pushing higher through to 2200 is our target for Palladium. So that one still stands. AUDCAD, this one is most likely going to be a great trade. Last week, Wednesday, I was expecting to see a push high and a low, so it didn't quite, it actually followed this light blue line, but it pushed down lower, and it finished off here. So what it's most likely going to do now is it's going to potentially push even lower. Point 1, point 2, there's going to be potentially a third touch of this trend line. Let me get rid of this box. Get rid of these, get rid of this. So what to expect now is that one there. Need to get rid of some of these supports. There's too many of them. Okay, that looks good. So what to expect now is, get rid of this. We can see sellers coming into the market because this impulsive wave has broken this area. So a lot of sellers are coming in now. What to expect now is potentially a push down lower. And then that break and a shift higher. Expecting to see that target to be hit. That's the first scenario. Or since there's a lot of sellers in this area, liquidity to be grabbed around here, could potentially see a push higher. So 2 scenarios most likely to be played out for AUDCAD. But the momentum at the moment is pretty bearish. You can see here in this area, this zone. So we could see a lot of sellers coming in here. So you could potentially see a push higher. Most likely this pink line to be followed more rigorously than the black. But you never know what could happen in the markets. We've got a lot of news coming out next week. So we could potentially see a retracement lower. And then we could catch this one from these lows here. In terms of fibs now, this was the last impulse, retrace, impulse, and then we had an impulse wave down. So a realistic place to put it in terms of stops, just to be on the safe side, you want to be placing your stops just below that 113 here. A psychological stop loss, because we could easily get this area to be targeted back again, consolidated area, come back into this region before exploding back up again. AUDUSD, this has hit our psychological stop loss, guys. It's attracting a hell of a lot of sellers in the market right now. Momentum does look like it's pushing down, but since we do have news this week, that was 0.1, 0.2. This was the third touch of this trend line here. It has broken down. I think this is going to be a fake out, but we could put our trend line here now. Most likely going to be a fake out, attracting a lot of sellers in the market here. And it has come down to our psychological stop. Currently in drawdown on this one, but what to expect now, since we're looking at this, is we could see buyers starting to come in here. So what to expect now is potentially a push down lower through to this area here before that major push higher. And then targeting 0.77. So we're still targeting 0.7. Had that psychological stop loss been triggered at this moment in time. So what to expect now is get rid of that. It's made that impulsive wave now. The most safest place to have put your psychological stops is around here. I did go a bit tight because I was expecting to see a push higher, but we didn't quite get that. So we could expect to see 78.6 as our target to potentially look for longs. That will be the golden setup, the golden entry. You can potentially start to add some longs here, but to be on the safe side, 0.712 is the safest spot to put your stops, because it could easily go down even as much as towards the 88.6 or 78.6, whichever way, but it could easily go down here before pushing higher, and yeah, and then targeting that extension. So two scenarios most likely to be played out on AUDUSD, but yeah, just trying to be a bit more realistic with our projections, but definitely projecting 0.77, 0.76836 is our projection for AUDUSD. Gold, this was a beauty of a trade. It actually pierced through this support area. Now what to expect now is potentially an immediate hit of 1830, and then we will look at what to do next over here. But for those who did miss it, you could always enter again. I'll delete this, get rid of these. What to expect now, we've had that impulsive wave now, and yeah, in terms of entries, you can see it hit that 100%, pushed higher, and it hit the 38.2. So what to expect now is if we do get a retracement back down through to these levels here, it could easily hit the 38.2. If we do get that rejection at 38.2, guys, it's very excited. It's very exciting to hit the 27 extension easily, pretty rigorously as well. We've got the momentum there. Momentum is pushing up now. So we could see 1830 being hit. And for those who are looking to potentially re-enter, you can easily re-enter here, but place your psychological stops below the 78.6. Could potentially get a 1-to-1 or 1-to-1.3 risk to reward for those who did miss it. However, if it does go even lower, it rejects even lower towards the 88.6, then this will be an interesting area for you guys to enter with a better or a higher risk to reward. One to four for gold. So two scenarios most likely to be played out through to this week for gold. This one here hit our target of our first target actually pretty much straight away through to last week. I did mention we could have that push down, target this area, then a retracement. So do take profits off the table for this one. However, what I'm expecting now through to this week is potentially a push higher before melting down towards our next TP. Or it could just literally just melt down, retrace and push down towards that second target. And then we've got our third target of 0.895 to be targeted in the future. So two scenarios most likely to be played out for USD Swiss franc. New Zealand Swiss franc pushed all the way down towards this daily support, and now what to expect now is a push higher through to these highs before melting down towards 0.64. So still currently maintaining my short trade from all the way up here, expecting that target to be hit, and we've got a few more targets down there to be hit as well for New Zealand Swiss franc. For the dollar has been pushing up off the back of the news last week. However, bearish tone still maintained from the dollar. Still expecting the dollar to melt from these highs. So it's currently actually following this pink line here. So what to expect now? Let me get rid of this. It's broken out of this wedge. A lot of buyers coming into the market. What to expect now is a push down at least towards 93.4. A bit of consolidation and then a major breakthrough to this level here. Or a push lower, attract more buyers into the market before meltdown towards 93. Volatility, it did push higher. It did push higher actually the week before that. Start of this week, it was the first, I believe, yeah, pushed down lower, and then it pushed towards the end of this week. It made a spike. So it's currently following this sort of red trend line. So what to expect now is potentially a push higher, perhaps, because as I did mention earlier, we have a lot of high volatile data releases, so we could expect to see a push higher through to these highs, or even potentially. I'm actually looking for 25 as my main target, or we could see a meltdown potentially from the start of this week before pushing high and targeting 25 for volatility. Even though I did mention to you guys, retail traders have crept in. A lot of buyers have crept in from the CFTC report. So these red lines is most likely going to be our target. 15 is going to be a beautiful area to look for entries for the VIX. 15 is our target. But yeah, do keep a close watch on volatility. And that's that really. Just currently focusing on these few trades, expecting to see a further momentum, further push down for oil. USDJPY, definitely looking for shorts, have been looking for shorts from up here. Now is going to potentially be the meltdown for USDJPY. Palladium, still looking for longs. We could have a major retracement lower before pushing higher. AUDCAD, it could potentially push higher from the current levels, or we could have a retracement. AUDUSD, this is also another one that we're looking at. Our golden opportunity of 0.73166, beautiful area to potentially look for longs, or it could potentially push higher from current levels as well. Could push higher from current levels as well. So do keep an eye out of that one. Gold, this one has broken through our targets, expecting to see 1830 imminently to be met. I wouldn't advise to enter at these highs. Potentially, if it drops down lower towards the 88.6 fib, that will be a decent area to look for longs. USD Swiss franc, this has been ticking down beautifully throughout these last few weeks. However, expected to see a retracement higher, attract more buyers, break this trend line before breaking down lower. New Zealand Swiss franc as well, same scenario, looking for a retracement higher for me to re-enter short for New Zealand Swiss franc. But for those who are currently short this one, do take most of your profits off the table. I'm expecting to see a retracement higher before that push down. And the dollar made that beautiful push higher, liquidated most positions. We could potentially see it potentially push even higher before that major meltdown. Now, looking at the dollar, let's have a look at it on Coinbase. Just before we finish up. Dollar, dollar, dollar. We've got the true USD dollar here. You can see a lot of sellers coming into the market, hence that push higher towards the end of last week. So it's currently liquidating before pushing down lower. Overall, large speculators are looking to position themselves to push down. You can see this sort of curve here. However, there are overall long. So there's a lot of buyers coming in as well as sellers, but looking to liquidate 95 potentially before melting down. Too many buyers in this area looking for a major shift lower for the dollar. And that's that. Is there any questions before I finish up? Any questions? You guys relatively happy with the overview for this week? Pretty detailed this week as well. Every Sunday I try my best to make it as detailed as possible for you guys. Yeah, so that we could basically make the most of it for this week. Any questions? Well, I hope you guys have a pleasant week, and yeah, I'll see you guys on Wednesday. Do keep a close eye on the volatility and these trades that we're currently looking at for entries, re-entries as well. Thanks very much once again, and I shall see you guys on Wednesday. Thank you. Bye for now.